Hello, traders. It's 8:01 a.m. Chicago time on Monday, the 12th of February, 2018. Thanks for joining me again. Exciting start to an exciting new week. Hopefully, you had a good weekend. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning relative to Friday's closes, we're seeing the 10-year notes lagging today, down 10 ticks or 0.26%. The Russell also is down 3.3 points or 22 basis points. Much of the rest of the markets is positive to flat. The Bund is down 11 ticks. The U.S. Treasury bond is flat for the day. It's unchanged. The leader this morning is the DAX, which is just catapulting to upwards. 251 points, up 251 points or 2.08%. That's the leader by far. Euro Stoxx 50 up about 2%, 64 ticks. And crude oil is making a little bit of a comeback, up 93%, trading 93 cents, up 60, trading up at $60.13. I cannot talk this morning. The S&P is seeing a gap up into Thursday's middle of Thursday's range. The S&P also is trading right against the MC point of control since the sell-off at 26.43 on the dot. 24-point gap, up 0.91%. Gold's also up. So overall, bonds. I'm looking at the U.S. bonds. Yeah, I'm not seeing them being up. In fact, I see them down a tick, trading at 144.03 for March. Anyway, so that's where we stand. The market's allocating to risk this morning. Volatility still expected to be high. The range based on volatility is currently at 46 points. But we'll see. That's his 20-day historic volatility, close to close. So we'll see how that pans out. The high overnight's 26.55 in the S&P, and last week's close is at 26.18 below us. Based on Friday's action, it seems to me like the market is finding a base, a temporary base, and that's what I'm looking towards today. Because it's the beginning of the week, I want to take a look at what we should expect for the rest of the week. Now today, the calendar is very light. We have a 2 o'clock Eastern monthly budget statement for January expecting 50.0. And that's about it. There are no speakers, nothing. So the market's on its own power today. And tomorrow we have nothing in the U.S. markets. The UK gets PPI, CPI, RPI. We have Fed's Mester speaking Wednesday. We get some numbers out of Germany, Eurozone, U.S. retail sales, CPI, business inventories, ECP's Weidemann and Mersch. So that day has some numbers. Thursday, we get Eurozone trade balance, U.S. PPI core, Empire manufacturing, jobless claims, Philly Fed, industrial production, and ECB speakers. And then Friday, we get UK retail sales. And in the U.S., we have housing starts, import prices, building permits, and ECB's CUR. So overall, when we look at the calendar, we're just not finding any top tier numbers really. CPI, PPI, of course, but the days, the economic releases are quite flat, mainly in the latter part of the week, Wednesday onwards. So again, this might provide some calming effect on the markets. So that's the calendar. Let's take a look at what we expected on Friday, which was way, way, way off. But that's okay. We trade what we see, not what we want to see. So Friday, given the close of Thursday and the gap up, the expectation was for the market to take a bounce and finish. I was looking for a finish in the 26 in this area that's outlined here between 2611, 2610 and 2660, somewhere in there. The expectation was for the market to dip down and come right back up. And come back up. And so what it did, in fact, was to dip and get to our main target, but it did so via 25.30. It went way down here before it came right back up. And to me, that was a pretty good bounce. And I think it'll likely scare off sellers temporarily. Again, temporarily being a couple days this week. So we're looking, and then the secondary plan was to see if the market will bounce up to 26.30. And then again, 26.30 being the key figure to test above 26.30, and then rotate down and start testing into that 25.75, take out the prior day's low, and then run up on the close. Again, those plans were way off. The reason I go over them anyway is because we're tracking how the market's behaving versus our expectations. Let's clean this up a little bit. There we go. Oh. Well, all these naked points of control. You see how much repair the market's having to do over time. So let's bring that back and then just look at the profiles. There. So there's a lot of repair that we've been doing. You've noticed that if you've got flex levels and the bookmap levels, probably see that a lot of levels have just fallen off the chart as the market has pulled back to pretty good balance areas. What we've done is we pushed down on Monday. We had a bit of a sell-off on Friday, which seemed like a big sell-off. That we really slipped on Monday, and then we continued lower on the reopen on Tuesday, and then we rallied for a small bounce. And then from there, we continued lower. And then on Friday, we found buyers down here at 25.30, and we took a nice bounce to 26.34, pushed through 26.30, and we finished up right in the value area, right into this area that I outlined on scenario number 1. Of course, it didn't do it the way I had expected, but it's hard to have a solid footing in this market on what is likely to happen, because it is a bit of a panicky market. It's quite incredible how much it's changed since just a couple weeks ago, or it's just boring 12-point ranges or whatever. This is my kind of market though right now. So this morning, as we push forward, we're trading at 26.35. We just dropped from 26.49. That's 14 points in the last 10-15 minutes or so. And the market has pulled back almost to the midpoint of this last short swing. I also have the midpoint of this bigger swing on my chart. I'll show you that in a second. And overall, the market seems to be wanting to recover a little bit before the next leg, which I cannot predict, of course, at this point. But overall, the swing mid is at 27.0275. Is such an incredibly noisy chart, because we're looking here at about 400 points of range where we normally look at 30. I posted last night some tweets about the the rotations, the harmonic rotations of the ES, they're running quite high. They're about triple what the norm is on the downside, about double, a little over double to the upside. And the reason I track these rotations is because I need to know how to adjust my sizing, right? So I could use the professional fund managers and so on track volatility through just look at historic volatility as a percent, and then they track it that way. I'm just a day trader, and so I look at it from the point of view of what is the current rotation, fractal rotations on this product. Okay, so let's look at that real quick because it's important to note what we're looking at. This is a 1 minute chart. And we're looking at 20 days. Okay, so normally, what this does, let's change a session. These are all settings that have to be made depending on the product. So I'm simply looking at day session or RTH pit session only. And normally when we look at these values here, this looks at all the positive swings and creates a profile. There are 533 being looked at in the last month here. And it creates a profile and tells us the value area, or what we would consider to be normal down here for an upswing. So we're looking at an upswing, and we have 5.75. This figure is usually 2.5 for the S&P minis. This figure here is usually 2.75. Okay, so we generally use about a 3-point rotation, harmonic rotation on a 1 minute basis for the ES, and you can see how it has expanded quite a bit. This also tells me what is not normal. What is not normal? So anything above 6 points, I don't consider anything impulsive until it gets to the second standard deviation, which is about 95.45% of the statistical sample. You see, this is just a histogram. What the green part here is just a histogram, right? We're just taking the population and plotting it over the occurrence of that data point. And so what this has hopped to is 18 points, usually around 6.25. It's hopped into 18 points over the last 20 days. And what that means to us is that we need to trade about 1/3 the size to maintain. This is just a kind of a rule of thumb. We need to trade about 1/3 the size to maintain equal risk. So if you're trading one lots, it's especially on a small account, you have my sympathies. Not that you need them, but you have my sympathies because it's very difficult to go any smaller, right? So your only choice is to expand your stop, and right now your stop needs to lay outside of 6 points on the upside and 7 points on the downside on down rotations. That's just a minimum. So I've received quite a few messages, direct messages, emails, and so on, people saying, hey, I get the direction right, I get the idea right, but I keep getting stopped out. And of course, you ask the question, what is your stop? Well, I've increased my stop from 4 ticks to about 8, doubling for volatility, and you're nowhere near what you need to have for this sort of volatility. I mean, this will cover, look at this last move here. Look at Bookmap. Check that out. So we just moved from 49, where the overnight point of control was, okay? And in 5 minutes, we moved 10 points. And in another 5 minutes here, we've moved another 12 points. And now we're dropping again 33 to 26. So 7 points in this last little move in 1 minute. This is the kind of market we have. And so using 8 tick stops is just a good way to get your your account chopped up to pieces, and it's that's just the way it is. So you're relegated on a small account to have to go trade the micro FX products, which have been moving around pretty decent, or you need to go to options. And again, not suitable for all investors. Options have a lot of complexities, including lack of liquidity. Sometimes if you overstay your option, instead of rolling it, and so on and so forth. We won't get into that here, but that's where we stand. The overnight session. So that's how we ended up on Friday. We're still pretty strong. We're still up from 26.18 close on Friday to 26.35. So we're still gapping up 18 points, but we're back in range as opposed to having an opening out of range. Here's what the overnight session looks like. The insanity of it all. This is the overnight session. We gapped up slightly, and we took a strong vertical move on the European Open. And we're taking all of that back. Beautiful double distribution profile in the overnight session, just giving us a very clear outline of where the market is likely to meet its first potential short-term resistance on the open. You see that 26.45 area is pretty decent resistance on initial resistance on the open. We break through there. We get into the upper distribution. The volume is about 3 times the norm, and the range is relatively high. It's not huge. We've only done 22 points overnight. The last few overnights we've had 37, 41, 36, something like that. And so that's it's compressing a little bit. We didn't have as much action overnight as we normally do, but overall the market's dropping back into the lower distribution. So the point of control has shifted up, has basically shifted up with the market right up here, and now it has shifted back down. And overall, I expect a responsive play into the prior day's range as the first test. So, one more thing in our review that I wanted to go over that you needed to look at. I've had to change this chart, market profile chart, to show the ranges in 1 point increments. Otherwise, it just gets too noisy per tick. So it's not going to have single prints and things like that as cleanly as a normal chart. But this is what we did last week. Here's what things have looked like for the last few weeks. Let me change my pen. Nice little blue here. We go from a week where the market just is unable to hold a regular auction, skipping through the prior week's point of control up at 28.40. Leaving a gap behind, very balanced for a couple of days, and then it just pukes right here. That's the Friday. Monday comes in, we open, we test up. We're unable to regain the prior week's range. This is a beautiful test on Monday, unable to regain the prior week's range, and it just moves downwards. And you can see Monday, the gold goes all the way down here, almost showing us an excess low. So if we split this profile, it's important to see what it has done. So here's the Monday, straight down, showing us a small excess as the next day opens up here and then tests down, and then we get the bounce, and then we continue on, and the market's just not able to hold a bid until Friday. Friday, we get down in here, we put in a small excess low. We show that we are rejecting this 25.10 to 25.40 range, which is a low volume node on the composite, and we finish fairly strong. We get back into line with 26.38 or so, where this that week's point of control is, and that's where we are. And we're currently trading somewhere in here against this point of control right here. So you can see that the market has absolutely destroyed the longs here. and is advertised prices lower to seek buyers. They've temporarily found buyers, but then sellers took over again. It moved high enough for sellers to step back in, and sellers are dominant until price got down here, and then it found buyers again, and we are in that spot right now. So that's what we accomplished last week. So when we look at it on a big picture basis, I know this is taking a little long, we have basically moved into these areas where we've had some pretty decent balance here. Let me move this out of the way. Pretty decent balance here, right? 25.30 was an MC point of control from way back, and we pushed right into it and have bounced back up. Does that mean the selling is over? It does not. What are we looking at for today? Again, the idea here is to create a plan, not because we want to see the market just do, perform our bidding, but to visualize what things might look like, and how we might respond. Okay, so that's the goal here. So as we set out these plans, I'm not saying support and resistance are in these turning areas, although it's based on that. It can do whatever it wants, but overall, I'm expecting that the market is likely to turn in those areas and find a response. Remember, the market's an auction. So open auction, I'm looking for the market to become responsive this morning. I'm looking for some initial resistance in that 45 area up here on the overnight profile. And I expect that to be tested. I'm looking for the market to be responsive, get back into value. Even though the range is wide, we have pretty decent value here. The value range is very high. And then I'm looking for the market to get back down into the 25.90 area right down here, which is the point of control, which is also Thursday's close. And then I'm looking for a bounce into the close back up above 26.40 into the close. That's what I'm shopping for today. So I'm looking for how the market's going to respond. How the markets are going to respond as we push higher, especially into 26.40. Remember, 26.40 is an overnight level. It is not supported by the underlying stocks, so you don't want to lean into that too much. But that's the first area I'm looking for the market to see as a hurdle, and then I'm leaning into the book to short it. I'll show you that here. So as the market pushes up into this area here, right? So we have a nice zipper zone. As the market pushes back into this area on the open, I'm looking for how's the order flow and the offer respond, and I'm looking to lean against that for a short for the rotation down. So back to this screen. So I'm looking for it to get down into the 25.90. Gives me about 40 points of range if it happens to break into the prior day's value. Gives me about 40 points of range, and then we start to rotate down and push through. So that's what the primary idea is. Okay. The secondary is we get responsive right away, push this overnight low. Remember what the overnight chart looked like. We get an impulse higher. So now we found buyers again. This could actually dip deeper. Get an impulse higher, and then now I'm shopping for a long to get back out of the overnight high and to start moving up towards the 27.02. Yes, I said 27.02. It's 100 points away. I'm not saying it'll achieve it today, but I'm looking for the market to begin its push higher. The late shorts are likely to get a squeeze on and get pushed out. There's scenario 3, 4, but it's 8:26 here. The market opens in 4 minutes. I'll let you go at that. Sorry, went long. There's a lot going on, and I want to make sure it's the context is a little more comprehensive. Good luck today. Risk is king. Risk is king in this market. You give up on risk, and that account will dissolve very quickly. Good luck.